Good morning. We are post-election day, midterm election day, and the Democrats took the House, Republicans retained the Senate and the presidency, so we got 2 out of the 3. And as Trump is appointing new Supreme Court justices, we're getting the judicial branch as well, so we've got 3 out of 4. So ultimately, what do I care about that? Nothing much. Does it really make a difference? No. In some ways it does, because it makes politics slower, because now we have a wrench in the gears, which sometimes is good because it means less changes are going through on the conservative side, at least. It takes more time, like I said in the other video, it takes more time to make decisions, so we make better decisions as we go slower. And I'm all for that. So far the markets are positive today, but the overall fact is it doesn't change what's going on in the United States. We have a credit problem. Got too much debt out there. And no matter who you elect, there's still debt. No matter who you kick out of office, there's still debt. So the reality of the matter is that long term, I still see a crash. So let me kind of go over what I kind of am doing market strategy wise. I kind of haven't done a video on the markets for a while, but partially because my overall view of the markets hasn't changed much, but a lot of people haven't understood some of my positioning. So my long-term view over time is that the dollar is going to crash. Long-term could be 10 years, could be 20 years. But at some point, I believe that everyone's going to dump the US dollar. Not completely, but enough to make the value go almost to zero. And therefore, anything priced in dollars is going to get very expensive because the value of the dollar is going to be weak. So long term, very long term, my view is we're going to have hyperinflation. Medium term, we have this credit issue that we're going to have to deal with, where we're going to have people not able to pay their bills anymore. They're going to want dollars in order to pay their bills. And because of the credit ratings of a lot of the people, you're not going to have banks extending money to them. And same thing will happen to the banks, because the banks have loans that are already out, and they're going to be defaulting on the people they lent to are going to be defaulting on those loans. So the credit ratings of the banks are going to go down. So we're going to have a credit crisis that's going to be coming up, a liquidity crisis attached to that, because everyone's going to scramble for dollars. So in the medium long term, I see a crash in markets, and I mean all markets. Anything that has gone up in the past will go down as people sell those assets in order to get their hands on cash to pay their bills. I've gone over this before in videos. I have a series on liquidity crisis explaining it. So my medium long-term vision is that we're going to have a big crash, because things have just gone up and up and up and up, and what goes up must come down. You have the words wave and tsunami that came up in this past election, and I think those terms are little buzzwords that are letting us know that we need to think in terms of tsunamis and waves and what happens. So we had little short-term crashes, right, in the past, in October and some in September, and the tide went out. And everybody was like, oh, the tide's going out. What's going on? There's a little bit of fear because there's a little bit of uncertainty that goes on there. And then what happens with a tsunami? The wave comes right back in, and it crushes everything that it touches. But after it comes in, what does it do? It goes back out again. And what does it do when it goes back out? It sucks everything that it's just crushed back out into the ocean. And so in many ways, the sucking, that second sucking, is what takes everything from everybody. It takes the lives of people. It takes the properties of people. So the crash that I believe is coming is going to be bigger than any of the downturn that we just saw in like October or in the past, where there are little short-term sell-offs, which I made some good money off of putting short positions in. Now, historically, Warren Buffett has made crap loads of cash. And he's made comments about when the tide goes out, you'll find out who's wearing their shorts or not. Now, the average person hears the word shorts and they think pants. So they think it's a funny joke that you'll find out who's swimming naked. But if you think like an investor or a speculator, shorts imply options or futures. Shorting the market means you're selling the market in advance to a crash. And in the past, people have used the futures and options markets to hedge their positions. And in a lot of ways, I do that same thing, but I'm not super wealthy. And so super wealthy people use futures and options to hedge. In other words, they'll buy things and they'll hold them and they'll own them, but they will short the markets in order to kind of have insurance. I do that same process or that same philosophy, but in a little bit different way. I look at my long-term and my medium-term views, which I've already expressed. Long-term, I think there's going to be hyperinflation. Short-term, I think there's going to be a crash due to a credit crisis. And I look at those and I start to implement a short-term strategy, not to be confused with the word short. I'm using time frames here. So I have my long-term, my medium-term, and then my short-term, like anything from a week to 6 months to me is a short-term strategy, where I may see the markets may rally even though I see a crash coming. And I may be bullish, like I'm bullish on government treasuries. Why am I bullish on government treasuries? Because I just believe that there's, due to the interest rate issues, we're going to have people who want to buy into treasuries just because the interest rates are going to rise. With the Fed and with actual pricing of risk, interest rates will rise, and when interest rates rise, people will want to lock in those rates in the government bonds long term, so they'll buy them. And so I see that there may be a short-term bond rally that may be coming. There may be a bond sell-off very soon after that, or we may get the bond sell-off before that. And when the bond sell-off comes before that, your interest rates are going to go super high because interest rates are opposite of the sell-off. When bonds sell off, I would be buying at the top when you see the interest rates jack up like that. But anyway, what I'm saying with the short positions, let's say, like I like gold and silver. I've always liked gold and silver because long term, again, like I said, money is going to become worthless, and I like to hold money. So in the short term, there's going to be fluctuations. In the long term, I believe the value of gold and silver are just going to rise until the end when it super spikes. And at some point in the end, you're going to want to get out of gold and silver and put it into something else, because at that point, that'll be a bubble, because everyone's going to be trying to get into it. Everyone and their grandma are going to try to get into gold and silver at some point. They're going to be claiming that they're pros about it. But I've been a pro for years about it because I bought in when it was cheap. But I don't want to ever sell them until it's over, until the bubble's over. So what I will do is I'll use options and futures to kind of take advantage of short-term price movements where, oh, I feel there's going to be a little pop in gold. Like there's kind of a little pop right now. So I'll go long. I'll ride it up. And if I feel like that short-term movement is done, I will switch directions and I will short gold and silver. They will go down. Now with options and futures, you're dealing with ultimate risk. So you have to use certain strategies to minimize that risk, or you do also what Warren Buffett has done, is he put all his eggs in one basket and you watch that basket closely. Now if you get a super sell-off, due to the high frequency trading of these computers, you may not be able to get out of your positions if they're losing money fast enough to prevent a major hemorrhage. So I really recommend using risk mitigation strategies if you are using futures and options. Educate yourself on it. I'm not giving you financial advice. I'm giving you a little bit of education on it. So if you're interested in probably deploying or employing those strategies, you should start to learn a little bit more about them before you actually do them, because they can be super dangerous, but they can make you a lot of money in the short term, because assets like gold and silver don't make money. They're not investments. To me, they are a form of insurance, but they're not a form of insurance that you pay premium on. It's the type of insurance that you're going to hold and your money gets tied up forever until the event occurs. So gold and silver don't make money because there's no one paying rent even though you own it. See, like with real estate, you can own the asset, but then if you get somebody into that asset, they'll pay you rent, okay? You can't do that with gold and silver. No one's going to climb into a bar of gold and silver and live there and pay you rent. It's just going to sit there. So after you buy it, your money's been tied up. So you just have to wait for that inflationary event, and you could be waiting 30, 40, 50 years, a whole lifetime, and nothing happens. In the meantime, your money's tied up, you're not making any money. But I still put a good portion of my money in gold and silver so that I have it for safety, because when everything falls out, you're not going to have time to buy gold and silver, and it may not be available at that time anymore. And it may also not be available at the price you want if it is available. So the price may be super high. It could be like I'm just going to give you a hypothetical. It doesn't mean it's going to go there, but it could be like 500,000 an ounce for gold. Well, are you going to be able to buy an ounce of gold at that price? Most likely not. So the time to buy things is when they're low. You buy them low, own them, and hold them. Buy and hold. This is what I do with cryptocurrencies. I buy them when they crash and I hold. However, right now, the way I view cryptocurrencies is they are tech stocks because they are technology. They're an innovation. And they're a hybrid tech stock, meaning they have a currency element to it. So if you have a currency element to it, you have to think of them like gold and silver. They're not going to move with the markets until you have a currency crisis. And currently, they're going to be moving with speculation. So since there's no inflation in data, there's no growth anymore, even though President Trump keeps saying there's growth in the economy, tech stocks have been selling off. Even Apple is showing you that their new iPhone has not been selling, so they're taking off the sales. They're not advertising it. They're showing that there's weakness in the tech sector. So the tech element of cryptocurrencies is going to come into play, and you may get some sell-off. Now, cryptocurrencies are up since they were first doing their crazy rally. So again, when we have that crash, people are going to sell anything and everything that has value in order to get their hands on cash. And at that point, the dollar will gain in value because people will seek the dollar in order to cover the bills that they can no longer pay. And so cryptocurrencies will be victims to that. And you're seeing a lot of shit coins that are getting killed right now. They're getting delisted. People wanted to speculate in shit coins and ICOs, and they've been murdered because the reality is there's no growth. People know that. Interest rates have been going up. Tech stocks tend to rally when you have interest rates because people borrow on the innovation, because the innovation doesn't have a monetization character to it yet until it's proved. And so people borrow in order to develop it because it's a future thing, and future is a gamble. So they need to borrow money because investors won't give them cash to do it, and no one's going to invest their cash on such a high risk possibility of this innovation. So again, this all implies whatever happens to the tech sector is going to happen to the cryptocurrency sector. So I see a lot of weakness in cryptocurrencies. Now, if we have a monetary crisis, Now, again, the currency factor of the cryptocurrencies will come into play. And I would stick with the main cryptocurrencies. I am sticking with the main cryptocurrencies on exchanges for the very fact that they're delisting a lot of the shit coins. And even though in the future some of the shit coins may become valuable, if you own them and they delist them, there goes your money. And if you don't have a wallet in order to hold them separate from the exchanges, when they delist them, c'est la vie, adios, baby, kiss your money goodbye. So this is something to think about. If you're going to invest in shit coins, you better have a hard wallet, an external wallet, where you can keep those shit coins until they show some value, or at least hopefully the exchange will not delist them. So, but if you're holding your money on the exchanges, that's what happens. They can easily steal it, and people can hack into exchanges. So cryptocurrencies, to me, right now, I would be buying the main ones on dips, buying and holding forever. And now they have futures on Bitcoin, so you can hedge in the way that I've been talking about short term. If you feel like you've bought it and it may go down further, you can short Bitcoin a little bit. And then, take your profit, and it's almost like you bought Bitcoin at the bottom when it goes down. So that's one way you can use futures and options to kind of offset your potential losses. So anyway, like I said, the elections have no effect on what's going on. The overall game is still on, and you need to have your head in the game and have an understanding of what's happening. Don't look at the politics. Politics is short-term stuff. This is the stuff that you use to buy your futures and options, because as they change laws and they make certain statements and they put tariffs on countries and do things like that, whether it's Trump or it's the Democrats or whoever, you're going to have fluctuations in markets. And fluctuations are great. Without volatility, there's no money making, right? Because if something just stays the same price as when you bought it, you don't make any appreciation. So you want volatility. It's great for traders. I don't like trading because, to me personally, I don't like charting, and to me, the technical analysis is bunk. You're not going to be able to use it anymore because you don't know what's going to happen short term. There may be a billionaire sitting on the sidelines, and you're looking at historical data of what people do, which works as long as the billionaire stays on the sidelines. But if they decide to buy all of a sudden, you're screwed if you're not ready for it. If they decide to short the market, all of a sudden you're screwed if you're not ready for it. So technical analysis to me is great in a calm environment, but as soon as the volatility kicks up, there's no way to anticipate what's going to cause that volatility to kick up. So you should always be prepared for that volatility by a strategy of your own. So you have to operate almost like a hedge fund. You have to start learning how to view markets and see things in advance so that you can weather the storm, you can profit from it. And, like I said, don't quit your day job. If you're like me, I'm not a multi-billionaire. So even though I've made good money in the markets and I continue to make good money in the markets, I still have a job where I have other income so that I constantly am bringing in money. And if the markets crash and I lose all my money in the markets, I have another way of bringing money in. I've been setting up businesses on the side that are easy to manage, so that I have money from that. It's almost a philosophy of multiple streams of income, but it's not so diverse that you get, overextended and you can't manage it all. See, I can manage all this stuff from my work. I can be on my phone and do my job at the same time. So those are things that you should think about, but at the same time, prepare for the time when you may not have a job, you may not have a market, may not have money, but at least you've got food prepared, water prepared, you've got all levels prepared. For years I've been telling people, prepare, prepare, prepare. So have your food and water ready, stored up. If you haven't done that, can't help you now, because now it's getting where we're in a grand solar minimum. Food crops are going to be going down. It's going to be harder to get agricultural products. Things are going to get more expensive, which is why I've invested in those things long term, along with gold and silver. But a lot of good money does for you if there's no grain in the store shelves. But still, you also don't want firearms taken from you, because when money becomes worthless, you can shop with your ammo. So that's just I'm not advocating violence, but at some point it could get to that if it gets really, really bad. So you have to have all those angles covered. And then you can just relax, have fun in the markets. Don't take too much risk, especially right now. I feel like we're going to have a lot of downturn. And keep it in perspective. Don't let the politics frazzle you, because really the politics doesn't do much other than just move markets up and down. And with that, I will end this video. It's been long enough. If you followed through all the way to the end, thank you for your support. Like, subscribe, and share. Share so other people will view this content as well and learn something from it. And I wish you guys the best until my next video. But the best and beyond. Okay, take care.